Software for calculating true job cost, service contractors. True job cost and invoice job cost, two totally separate things, and many times contractors are stuck in the latter. Listen, the software can only calculate what you enter. So if you're missing all of these elements, then you're getting the wrong number. By the end of this video, you're going to know what job costing actually means and why you need to have it processed out so that you can get proper calculations from your software. We work with quite a few electricians in our business, and these are service contractors that we have a lot of respect for as they go around both in installation methodologies and also maintenance methodologies, and they're doing a lot of good work for a lot of people. And one of the things that we have found in the electrical contractor space or any of the subcontractor and trade spaces is a lot of times they do a decent job of some what I'll call basic job costing, but there's some elements that they're missing, and that by missing those elements are giving them wrong calculations, whether they're doing it by hand, on a spreadsheet, or on a piece of software. Here's the truth for all service contractors or contractors in general. A partial cost is not a true cost, but it's a comfortable lie. Ugh, I hope that doesn't sting too bad. But it's one we can uncover and have a conversation about here so that you're prepared to go back into the software either that you have or you want to get to make sure that you're doing proper job costing with proper numbers and telling yourself the truth to understand what's the whole point of job costing? Job profitability. All right, so basic definition of job costing is when we take the contract value of a job, I'll put it over here, we subtract cost of goods sold, and what we're left with is a gross profit or a gross margin. Again, that idea of a profit, I don't really like that term because you can think that's your profit and it's not. It's gross, meaning there's a lot of other stuff that needs to come out of it before we get started. And I put the cost of goods next to our SLME or slime if you look at the line in between it, so you can understand where cost of goods comes from. But basic job costing, contract value minus cost of goods sold, that equals your gross profit. Now, here's where most contractors stop. And they're like, oh, look at that, I'm job costing. We're like, oh, not quite yet. There's still a couple things you've got to do because we've got a big number to be able to pull out of here. And that's the idea of overhead and also burden. There are a lot of people that don't look at burden. And then there's a third element of COs, or what they call change orders. You guys know what those are. There's plenty of change orders that come through. And a lot of times, unfortunately, those change orders are done on kind of a head nod and a handshake. And we've got to be very careful not to do that. It's actually another way software can come in and play to make sure that all change orders are actually signed off and two-factor authenticated between the two parties to make sure that there's agreement before we spend the money, spend the labor to go install that thing that somebody goes back and goes, I didn't call for that. And we're like, nope, we did. We signed it on both sides. So it's not just the cost of goods that we're looking at, but it's actually a variety of other things like the burden rate is what we call that. And I'll explain that in a minute. And then your change orders as well. So let me go through this and let me show you how job cost is going to take elements of all of these things. Let's start with cost of goods up here at the top because that's going to be your biggest one. And it ties straight into what we call this slime right here. What do I mean by that? These are subcontractors, labor, material, and equipment. So those four elements there are usually what make up the bulk of cost of goods. And so if you want to understand what your cost of goods are, what your gross margin is or your gross profit, then you're going to take the contract value of that particular job. You're going to subtract out your cost of goods, which is largely made up of your subcontractors, your laborers, your material, and your equipment. And so you want to make sure that you've got an equation for that either in your spreadsheet or in your software. Now, once we've got your gross profit, like I said earlier, we're not done at this point. That's where we want to bring in these other three areas right here, okay? So our major one is slime. That's usually going to be the biggest one of the job cost that we need to account for. But instead of stopping there, I want you to go another step, all right? The next biggest one usually is going to be overhead, right down here. And so our overhead is going to be basically any fixed expense that's below the line on our profit and loss statement. So on a P&L statement, you have total revenue minus cost of goods, and then sort of this line. And under the line are your total expenses, which is made up mainly of our overhead. And so our total expenses, we usually say are below the line, unless you're considering your net income number. And then the cost of goods are above the line. So when you have an employee, a lot of people will ask, do I put them below the line in overhead and expenses, or do I put them above the line? And the answer is, it depends. It depends on what the shared definition for you and your accountant is. If your accountant has made a decision to take any labor that's tasked to a job and put it above the line, then put it above the line in cost of goods. But if your accountant has made a decision to take any labor that's a W-2 and just not cost them to the job, keep them below the line. And so again, that decision is between you and your accountant, what that looks like. For our purposes here, we need to make sure that you are accurately accounting for overhead being pulled out of that contract value, or else you're going to think that your gross profit is your gross profit, and it's what you have to be able to pull out of the business. It is not. All right, so we've got overhead. That's a big one. Then also, while we're on overhead, we need to talk about this idea of burden rate. What in the world is burden rate? Okay, let's take your people-oriented overhead right here, mainly your payroll. A lot of times we pay that person, let's say we pay them $50,000 a year, and that's their annual income. Do you pay that person $50,000 a year? No, you pay them more than that. You got to pay payroll taxes and benefits and any other elements that by default, the fact that they're in the business, you have to pay it, that if they weren't in the business, you would not have to pay it. That's what we call a burden rate. Now, typically, we put a factor of 25 to 30% burden rate on every person that we hire in the business. This is good practice. Now, again, talk to your accountant. We are not accountants or CPAs. This is educational material. Make sure you talk to your accountant and you guys come up with a proper rate. I will tell you this, anything less than 20% is probably going to be way too short for what you're looking for. So talk to your accountant about that number, see what that looks like, but it's a burden rate on the payroll that you have to make sure that you've got good understanding on base pay plus whatever that burden is. That is total payroll that we're looking for, and that can be another terminology that you use there instead of burden. And then this other element are these little things called change orders. These can make a huge difference in both your business, but they can also make a huge difference in your customer relationship. Because guess who likes change orders mostly in a construction project? Well, usually the contractor benefits from those, even though they can be a pain and having to work the scheduling and all that stuff. But guess who doesn't like change orders? The customer, because they feel like it's an additional cost, even though it is. They feel like they kind of got duped. Hey, you told me the total project was going to be $1 million, now it came in at $1.2 million, and you're like, well, there's $200,000 in change orders that you agreed to, but they still don't feel that in the moment. They just feel the joy of that until the bill comes. And so you need to manage these really well and understand, if you were to go back and look historically at the bids that you've done, you could usually see what percentage of those contract values are impacted by change orders. In fact, that's a pretty simplistic way to look at all of this. You can look at historical numbers on your past few years of profit and loss statements to see what your cost of goods was based on these 4 elements. Also to see what your historical overhead is, and then you can apply the burden to that, and then you can go back job by job if you've kept some of that data to see what your historical change orders are per job. You could say, hey, the last 10 jobs we had an average of about 20% change orders or 5% change orders or whatever that was at a contract value of, and you can start to project that moving forward as to what that looks like. So true job costing, this is why you need a software that's going to be helpful with this and make sure you capture everything in the software. And when I say software, I'm also talking about a spreadsheet. You can just use that as well. But when you build your spreadsheet or customize your software, you want to make sure that it accounts not only for the contract value, but the cost of goods as defined by your subcontractor, your labor, your material, and your equipment. And then under that, notify you of your gross profit, and then make sure that you account for your overhead, your labor burden, and then also any particular change orders that come out. Make sure that you're covered for those change orders as well. I know a lot of this can get lost in the system. This can feel very overwhelming for you. Here's what I want you to do. There's a link in the description below to a training video that I've got that is customized and specific to you, the contractor business owner. It's called How to Build a System for Your Contracting Business. And so I want you to go there and start working on the full scope of the system of your business, and then come plug your job costing into the administrative process of your business to ensure that your jobs are profitable. That's what we're going for. And that's the bottom line for all job costing. Are we profitable or are we not? And oh, by the way, there's a lot of other questions that can answer for us. And the goal of those questions and answering those questions with proper job costing is to liberate you from chaos to make time for the things that matter most.